folks. Welcome back to our weekly training. We're a little bit early this week at 9 a.m., but that's going to be the new norm. 9 a.m. every Wednesday morning, Central Standard Time. My name's Tim Sternat. I'm a CPA and the founder of Financial Optics, where we help independently owned restaurant operators improve profits and cash flow. Over the last few weeks, we've covered your operating plan, cash flow management, and before that, the 7 financial system breakdowns that quietly cost restaurants money. Today, and let me share my screen here, we'll get into it. Today, we are going to cover streamlining your restaurant's financial systems. So we're going to get practical today because several of those breakdowns we covered last week happen when your financial systems are not connected, they're not synced, and they're not set up correctly. So if you're spending hours updating spreadsheets, hunting down receipts, manually entering data one system to another, or lying awake wondering about your cash position, today's training is for you. Every hour you spend on manual financial processes, that's an hour that you're not doing the important work. Taking care of your guests, training your team, or working on menu profitability. Technology should be your silent business partner operating in the background, and it should help you make money, improve your profits and cash flow, not just track the transactions. Today, I'm going to show you what a streamlined financial ecosystem looks like for an independently owned restaurant, not which specific products to buy, because your point of sale system, your payroll system might be different from the next owners, but what the ecosystem should accomplish and how the pieces connect, and most importantly, what it should be producing for you in terms of reporting and financial visibility, that's what we're going to cover today. All right, let's start with the systems you already have, because that's a question about practicality, not trying to reinvent the wheel. What systems do you already have in place, and how can we use them more effectively? Most of you already have a point of sale system in place. It's either Toast, Square, Clover, Heartland, Spot On. All those systems are the most common ones. Whatever you're using, and most of you have some kind of payroll solution, and most of you have an accounting software, probably QuickBooks Online, maybe something else. The system exists. The problem usually isn't that you need to go buy new technology. The problem is that is one of 3 things. The systems aren't configured for a restaurant. The chart of accounts is generic. Your point of sale categories don't map to your accounting categories or the chart of accounts that's set up for your specific restaurant. Your payroll doesn't separate back of house and front of house, or give you the detail that you need to develop a true financial plan. We've covered these things in week 6, and it's the most common breakdown I see. The other thing is that the systems are not connected. They're not synced. Data is being entered manually from one system to another, or worse, it's not flowing at all. Sales happen in the point of sale, but they don't show up in the accounting until someone enters them days or perhaps weeks later. And then the output is not producing, the system is not producing useful output. Even when the data is there, it's not producing the reports you need to actually manage your restaurant. You're getting a monthly P&L 3 weeks after the month closes, when what you need really is weekly visibility into your prime costs and how operations are performing each week. So today's training is really about 3 things: how to connect what you already have, or what should be connected, what should flow automatically, and what the output should look like when it's working correctly. Now, there are 3 layers to a streamlined ecosystem. And in the middle is the accounting cloud hub, the cloud accounting hub. It's either QuickBooks Online or some other system. It's set up with a restaurant chart of accounts we can see in the middle here, and you've got real-time visibility, instant financial insights. That only happens when the tech stack that you're using is integrated or synced with the accounting hub. Your point of sale systems, your labor, your AP bill pay, accounts payable, And then the third layer is, what is the output? Are you getting the right things out of your system? So at the center of everything is your cloud-based accounting system. Like we said, QuickBooks, perhaps Restaurant 365, maybe Xero. The most common is QuickBooks. Um, this is your financial command center. The accounting hub is where the data from the other systems comes together, as we saw in the previous graphic. Sales from your point of sale system, labor costs from payroll, vendor bills from your accounts payable system. It all lands here in the accounting hub. When it's set up correctly, everything lands there categorized correctly, synced correctly into your restaurant specific chart of accounts. Cloud-based is important because it gives you real-time visibility. You can see your financial position anytime, anywhere, and you're not waiting for someone to update a desktop file. And your accountant or your bookkeeper can access it remotely and provide guidance and catch issues early. That's how we work with our independently owned restaurant owners. And as we've talked about many times in this training series, the accounting hub needs to be built for restaurants. The proper chart of accounts set up with all systems feeding it correctly. So that's layer one. Layer two is the tech stack, the integrated tech stack. The accounting hub is only as good as the data flowing into it. That's where your integrated tech stack comes in, and the key word is integrated and or synced. These systems need to talk to each other automatically. So the point of sale needs to feed directly into your accounting system. Every sale should flow into the accounting system categorized correctly: food, beer, wine, liquor, NA, bev, catering, or other retail products if you sell them. Matching your chart of accounts, no manual entry, no rekeying data. If the point of sale categories don't match your chart of account categories, the mapping needs to be fixed. That's a lot of times where we start with when we're onboarding new clients, is we're looking at their systems, is everything mapped correctly, and putting in more detail if it's needed to get true financial insights into the restaurant. Payroll, labor costs should be synced automatically from the payroll system with each team member tracked to the correct position, back of house or front of house, and ideally by position detail, such as line cook, server, bartender, dishwasher. This is how you get the separated labor visibility we talked about in weeks 4 and 5. And this is how also sets you up for better financial budgeting, financial planning. You need that detail level to look out and actually plan what your coming months are going to look like. When these connections are working, every transaction is tracked correctly. From the moment it happens, a sale hits the point of sale system and it's in your accounting system. Payroll runs and labor's costs are updated automatically. The vendor bill is processed and it's categorized and recorded automatically. Now, there's a layer 2.5 that I call 2.5, and that's mobile expense management. Tools like Ramp or Brex add a financial layer of accountability to your system. Managers snap a photo of a receipt and the expense flows. So if your managers are buying a lot of product and or have expenses that aren't part of your ordering system, then this might be an important tool. It usually doesn't come up that much with restaurants, but it is a tool that solves those missing little receipts that can sometimes come back to bite you when you don't track them properly as you go. Okay, layer 3, as we looked at back up here, sorry to jump around a little bit, but I want to come back to this because this kind of makes everything flow. The cloud accounting hub is in the middle. The integrated tech stack is where everything starts and flows through the accounting hub. When everything's synced and working properly, you're getting the right reporting output to help you manage your restaurant and make better decisions. And here's what that output looks like. The weekly flash reports. When your tech stack is integrated, you should be able to see a weekly snapshot of your key numbers: sales by category, food costs, labor costs by back of house, front of house, prime cost percentages, not a full P&L, a flash report that tells you where you stand right now. How did last week perform? Did it meet our expectations? Was the week on track? Or did something indicate a slide in performance in a specific area that we're catching now and making adjustments now based on recent last week results and not waiting till monthly financial statements to see that performance slide. It's the same kind of reporting that the big restaurant concepts generate, sometimes daily, but you don't need a corporate IT department to do it. You just need the systems connected properly. And this weekly visibility is what lets you catch cost variances in week 2 instead of discovering it 6 weeks later with a monthly P&L. Okay, speaking of monthly P&Ls, our monthly reporting package, what should that include? At the end of every month, your system should produce a complete financial reporting package, which should happen within days of month end, typically at the latest by the 10th of the month. And remember, you're looking at the weekly report, so the monthly report is a bit of a higher big picture. It should include your income statement with full detail by category, your balance sheet, which we talked about last week as being critical to your cash flow analysis, and your plan versus actual comparison from the operating plan that we built in week 7, which should include an analysis of your key restaurant financial metrics. How are they performing in the current month versus how we wanted them to perform in our plan, actual versus plan? This is the reporting package that feeds your monthly review cycle. And because the data has been flowing automatically all month, it should be available to you within days of month end, not weeks. And if the system is set up correctly, the transactional data is flowing correctly, the monthly report should be telling you a story that's consistent with what you've been seeing in your flash reports. If not, then you and your accountant need to dig in, and either the flash reports aren't set up correctly and not tracking correctly, or something's off in your monthly financials. Usually the weekly flash reports, there needs to be a little more detail to catch that information on a weekly basis. Now, there's also menu decision support, our management decision support. I jumped ahead here on what it supports. Beyond the standing reports, the integrated ecosystem gives you data to manage better decisions day to day. Your menu engineering analysis that we talked about in week 3, that requires accurate cost data by item, which feeds into your detailed menu costing. Your labor scheduling that we discussed in week 5, that requires accurate sales per labor hour data. Your cash flow visibility that we looked at last week, that requires timely, accurate financial statements on an accrual basis. I'm not going to talk about accrual versus cash flow this week. You've had enough of that, but go back and look at last week to understand those concepts. Everything we've covered in the training series connects back to the quality of the data coming out of your financial system. When the systems are streamlined, the data is reliable. Let me back up, not just streamlined, but synced and mapped correctly. The data is then reliable and the reports are timely. You're managing your restaurant with the same financial visibility as the big concept have without the corporate overhead. All right, let's summarize what we talked about. This is a short one this week. So here's the big picture. Streamlined financial ecosystem, however you want to say it, for your restaurant has 3 layers. The cloud accounting hub at the center, your financial command center, with the chart of accounts built for the restaurant, the integrated tech stack that's feeding it, integrated, synced, and mapped correctly, point of sale, payroll, accounts payable, flowing automatically, categorized correctly, mapped correctly, with no manual rekeying of data and subject to human error. Reporting output that lets you manage your restaurant. Weekly flash reports for real-time visibility, monthly financials for the plan versus actual review and the higher level review, and the data foundation that supports every operational decision from menu engineering to labor scheduling. And remember, you probably already have most of the pieces in place. There may be a gap that can be filled with the right technology. Margin Edge comes to mind. But the question usually isn't whether you need new technology. It's whether what you have is configured correctly, connected with each other, synced and mapped, producing the output you need to manage your restaurant's profit and cash flow. Okay, take the restaurant financial systems scorecard. I talk about this every week. If you're not sure where your systems stand or whether your point of sale is properly integrated, whether the chart accounts is set up correctly, whether your reporting is timely enough to be useful, that's exactly what our restaurant financial systems scorecard is designed to evaluate. It's a free self-assessment at a high level that walks you through each layer of the financial infrastructure and gives you a clear score. Where you're strong, where are the gaps? It takes about 10 minutes. And again, it's a high level review, self assessment, and you walk away with knowing what needs attention. I'll drop the link in the comments below for you to download the free scorecard so you can see where you stand. So next week, we're going to switch topics to one that a lot of restaurants owners would kind of rather bury your head on, and that's debt. How to evaluate whether your debt is helping you or hurting you, restructuring options, excuse me, and when borrowing actually makes strategic sense. Not all debt is bad debt, but you have to have the right debt in place and manage it correctly. All right, thanks again for joining me this week. Let me stop sharing my screen and have a great week. We'll see you next week. Now, if this is helpful, we come back here every Wednesday. Follow the page so you don't miss next week's presentation or the weeks after. Thanks. Have a great week, everybody.